Although he bought the company for a token sum of 1 ringgit, but he had to inherit 11 million US dollars of debt. Customer demand, by far the biggest risk of any airline, has plummeted to almost zero. What are they doing differently now to withstand this onslaught that is brought about by the COVID-19 pandemic? Hi everyone, welcome back to the FIRL channel, the best place for long-term stock investors. My name is John, and in this video, you're going to learn about AirAsia, its history and its management, the business model, their latest financial status, and the potential risk and reward before you decide to invest in them. Before we dive into the details of AirAsia, at the time of this recording, the COVID pandemic has brought almost every airline in the world to its knees. AirAsia has not been spared and has seen an almost 96% drop in their sales for the financial quarter ending September 2020. Question is, will they survive the onslaught of this pandemic to their business and recover from it? Remember to stay till the end, where I will go through their financial numbers for you to evaluate and help you decide whether it's worth the risk. So we begin with the history and management of AirAsia. AirAsia was actually incorporated in 1993 as a private company by Haicom Berhad, which owns 75%, and Mofas Air, which owned 25%. In December 2001, Tan Sri Tony Fernandez saw a struggling company and decided to buy 99.25% stake under his wings, called Tune Air. Although he bought the company for a token sum of 1 ringgit, but he had to inherit 11 million US dollars of debt alongside 2 Boeing 737 aircraft. By November 2004, he managed to turn around the company and listed it for a valuation of roughly 3 billion Malaysian ringgit and approximately 17 planes under its assets. As of 2019, 275 aircraft, 8 airlines, and 162 destinations ranging from Beijing to Bali. Pretty impressive, right? Now a bit about the founders and management of the company. When Tan Sri Tony decided to buy AirAsia in December 2001, he did it with 3 other guys. Datuk Pahamin Rajab, Datuk Aziz bin Abu Bakar, and Datuk Kamarudin bin Meranun, his current right-hand man, with the help of Connor McCarthy. Tan Sri Tony himself is a trained accountant and was involved in the music industry in Virgin Group and Warner before venturing into the airline business. I think he got an inspiration from Sir Richard Branson, who is the owner of the Virgin Group. Datuk Kamarudin, on the other hand, is a trained actuarist but cut his teeth in fund management business, both in Arab Malaysian Merchant Bank and later on his own company called INTRINSIC Capital Management. I guess the results speak for themselves, right? An ailing and struggling airline under DIB Haicom to where is AirAsia today. Let's hope they will be spared from this pandemic and take AirAsia to new heights. By the way, have you gotten a copy of our stock portfolio guidebook? In it, we show you the tips and tricks on how to start constructing your 6-figure stock portfolio and what we can learn from the rich in their asset class choices as well. Best part, it's free. You can find the link in the comment sections below. So, AirAsia's business model. AirAsia Group provides scheduled, domestic and international airline operating services as a means of transport for both passengers and cargo. Yeah, your parcel needs to travel too, right? Their revenue are mainly made up of flight ticket sales as well as cargo services charges. It is best known for its tagline, "Everybody can fly." It pioneered low-cost flying in the Asian region, starting in Malaysia. It also introduced this thing called no-frills flying, charging for meals and in-flight entertainment. The only surprise is that they haven't started charging for seatbelts, right? Don't worry, I think they'll get there soon. They also implemented a fully ticketless travel, right? You are encouraged to book online, and their digital-first approach, which really reduces their operating costs and cutting the travel agents that they can sell directly to the consumer. Because of this, their passenger growth has been nothing short of phenomenal, growing from 24 million passengers in 2015 to 52 million in 2019. That's more than 100% growth in 5 years, guys. It's nothing short of amazing. What makes them different from your normal airlines? Now, this is the difference. In the past, full-fledged carriers usually fly into what we call main airport hubs in a certain country. And if you're a passenger wanting to travel to a smaller airport, let's just say city of Manchester, and you want to travel to a little bit more outskirts location, right? You have to make many different transits. This is what we call a hub and spoke model. AirAsia started flying direct routes, therefore cutting transit time and opening up new travel destinations that proved very popular with passengers that hated the transit times and waiting in these big airports. Once proven successful in Malaysia, right, they quickly expanded to other countries in Asia and have hubs in Thailand, Philippines, Indonesia, India, and even Japan. They've also built a very famous brand even outside of Malaysia through their sponsorship of famous football clubs such as Manchester United and Queen's Park Rangers. Last year in 2019, they won the world's best low-cost carrier award 11 years in a row, guys. 11 years from Skytrax. So, if you like what you're seeing so far, please remember to give us a like on the video. And if you're new to our channel, remember to subscribe and click on that notification bell beside it so you know when our new videos are out. So, how are AirAsia's financials? Airlines might seem complicated, but you just need to focus on 5 key parameters. The first parameter is actually sales or revenue. So, what happened to AirAsia's revenue? It grew from 6.3 billion to about 12 billion in 5 years. That's a 13.5% compounding annual growth rate. This may be showing you how many tickets are being sold on top of all the other ancillary businesses. The second key number is actually this thing called RASK, or revenue per average seat kilometer. It basically means how much sales they're bringing in per kilometer every time they sell a ticket. And in 2019, the RASK was 15.6 ringgit versus 14.2 ringgit in 2015. The next number you should be looking at is this thing called CAS, or cost per average seat kilometer. In 2015, it was 12 ringgit and 21 cents. And in 2019, it was up to 15 ringgit and 02 cents. An airline only makes money when the RAS, or revenue per average seat kilometer, is higher than its CAS, or cost per average seat kilometer. The next number is also very important, which is the load factor. That basically means how many percent of your planes are being filled as compared to the capacity of seats that you have. In 2015, their load factor was 81%, and in 2019, it increased to 85%. Now, every airline wishes that their planes are 100% full, right? But do you think that it's a practical and realistic number to have? Even hotels don't have 100% occupancy except for peak periods, right? So 85% is a pretty good number for me. The next important number to look at is the operating cash flow. This is a favorite number of mine as well as MJ. Why is that so? Because this is the lifeline of any company, and arguably more important than its net profit, as it shows the consolidation of all those non-cash items to give you a better perspective of the company's profitability. In 2019, cash flow from operating activities was 2.1 billion, even though they had a net loss of minus 283 million due to a huge depreciation of expense for the rights of use of their assets of their planes of about 1.24 billion. Now, I know it is a very long-winded sentence, but think of it this way, guys. Let's just say you bought a brand new car and you drove it out of the showroom. Now, you know that the moment you drive it out of the showroom, you literally cannot sell it back for the same price, right? Probably you lost 20% of the value of the car. Similarly to AirAsia, that's the same problem. They had to recognize this depreciation of their planes, but they did not fork out this extra cash. That's literally the simplified version of this depreciation. As I mentioned earlier in the video, their sales have dropped 96% with the most recent quarter ending September 2020. What are they doing differently now to withstand this onslaught that is brought about by the COVID-19 pandemic? For one, they brought down their fuel expenses by 70%. to 922 million from 3.1 billion previously. Secondly, they reduced their staff costs by about 358 million, and they tried their best to reduce the number of layoffs of their staff count rather than just firing people. Third, they disposed of their assets, and this helped increase their other income from 362 to 608 million. All in all, they reduced their expenses by about 2.7 billion or 39% in these 3 quarters of 2020 as compared to the 3 quarters of 2019. Well, tough times call for tough decision, guys. They currently have cash about 618 million left to keep the company afloat, and hopefully the private placement or the rights that they have issued will be enough to sustain themselves until customers take to the skies again. It's a very big question mark for all of us. Does investing in AirAsia come with any business risk? Obviously it does. And the first business risk is that it is in a very cyclical industry. Travel industry, it is considered extra spending, not your essential spending. And it is very much impacted due to a health pandemic like what we have today, especially more so in a globalized world. While I'm recording this COVID-19 pandemic has brought the travel industry to an almost complete standstill. Some countries are still having banned their domestic air travel for the past 3 months. Customer demand, by far the biggest risk of any airline, has plummeted to almost zero. No one is traveling. And because of the low fares approach that AirAsia does, that you have your tickets booked in advance, the current scenario reduces their forward bookings. Airlines have either had to reissue or refund their customers because of all these flight cancellations. Now, the second biggest risk is that most airlines buy planes via financings. Obviously, right, I don't think you're going to buy planes in cash. So, airlines with substantial debts, with little or no incoming cash flow, might not be able to service their debts on a timely manner. This puts them at risk of default and paying even heftier late payment charges. The next risk that airlines face is actually very operational in nature. As an airline, and it's still a service business, you require huge manpower to support its operations, and salaries still need to be paid, even though planes are not flying. The next big risk is actually their highest operational expenditure, which is jet fuel. To ensure their consistent supply of jet fuel, AirAsia usually hedges their fuel supply between 3 to 6 months forward. So they run the risk of paying higher fuel prices if the jet fuel prices actually slump. But then they protect themselves against the rise if the fuel price actually rises. As of today, we don't know when passenger volumes will return to normal again, and this will be a major risk for AirAsia or any airlines going forward. And all these fuel hedges needs to be either renegotiated or swapped out to be able to reduce their heftiest operational costs. So what could be the potential rewards of investing in an airline business? Now, many people feel that airlines are very risky, and they are not wrong. However, most of them tend to ignore the potential rewards as well. For example, one of the potential advantages of AirAsia, it is actually based in ASEAN or Southeast Asia. There is a huge population in Asia, which is about 667 million as of 2020. Most people don't realize that. And it's growing at a rate of 1.3%. Now, it doesn't seem like much, but when you compare it against countries like United States, which is growing the population at 0.6%, or China, one of the largest countries in the world in terms of population next to India, the growth is only 0.4%. Secondly, there is a huge and rising income status, especially in terms of GDP growth per capita in this region. It grew at around about 5.7% over the last 10 years. Now, in contrast, US GDP grew by about 1.6%, EU about 1.3%, India was very fast, about 5.2%, and only China did better at 7.2%. A growing GDP gives rise to a rising middle class. And what does this mean? It means more disposable income, which also indirectly means there is an increasing travel demand. The next advantage or potential that AirAsia has is purely because of its geographical location. Think about it, guys. Take out a map. Look at the Southeast Asian countries. Are there more land masses or seas? More water, right? And what is a more efficient way to travel? By boat or by air? I think most of you will agree that the safest and most efficient way to travel is by air, and it's a huge advantage to AirAsia and their business. The next potential advantage that they have is actually they have a very cost-conscious management. They're very focused on CAS, or cost per average seat kilometer, turnaround time, and their fuel efficiency. You should really see how AirAsia uses their data, just to save 1% off their fuel costs or save 1% off their turnaround time. I guess you gotta give credit to the management for trying to be as thrifty as possible in managing their expenses. So, what are my last thoughts on a business like AirAsia? Yes, it's very cyclical. Yes, it's very much impacted due to travel demand. But due to COVID, it is like any pandemic. It will pass somewhere in the future. I don't know when. But the moment it passes, you cannot abate the travel demand. Travel will resume. The only thing we got to figure out is how long can they last with the current financial status that they have. He's got to find a way to show up their cash flow, either by getting rights issues or private placements, and hopefully travel will resume as fast as possible, just to keep the wheel going. So those are my thoughts on AirAsia. Do give us some feedback on what you think about it. If you like what you've seen so far, remember to watch some of our other videos on this channel, and do give this video a like. Follow us on Facebook, Instagram, and hit that notification bell so that you know the next video is out for you, and I look forward to seeing you in the next video.